Now, investors are taking a pragmatic approach to the conflict in the Middle East, watching for a possible retaliation by Israel against Iran, or hoping for a ceasefire. How will the intensified conflict impact global oil prices, for example, in the short term, but the markets themselves? To help answer these and other questions, I'm joined in studio now by Martin Ackerman, Chief Economist at Citadel. Martin, good morning. Welcome to the South African Morning. It's really good to see you in person. We normally talk on Zoom or such. How, in your view, are investors and markets weathering this Middle East geopolitical storm?
At the moment, it's pretty much wait and see. There's a little bit of nervousness in the oil market. So this week we saw that the oil price went up. Gold, which is typically a geopolitical hedge, is also doing well. But if you think about, this has been going now for almost a year, longer than a year. And global equity markets are thriving. The gold price definitely is a reflection of that concern about geopolitics. Asian markets are doing extremely well. That's back on the Chinese stimulus early on. So it's as if the markets right now are still not really concerned about developments, but there is a nervousness, like I've said, on the oil side. And if this continue or spill over to other regions, then I do think we're in for
if
more
more
trouble.
Middle Eastern countries get involved, that could, if it escalates, that could spell trouble. And for us, with oil prices, I think oil has gone up. In the first day of that missile attack by Iran,
Yes.
we saw the barrel going up by $70, from $70 to $75.
Also, keep in mind that so that's a sensitivity that the market is sniffing. Iran produces about 4% of global oil, so it's not a significant supplier, but it is an important supplier. So depending on how the situation escalate, OPEC can certainly up that supply and keep the oil price intact. And they've made some of those noises as well earlier this week.